Hello everyone, welcome back to our channel.
Hope you guys have a wonderful day. If you guys are new to this channel, we usually talk about a lot of things.
Especially money. We love to talk about budget, investing, our side hustle on eBay we started last year. What else? Our kids. Forgot about them already.
I guess anything and everything when it comes to financial independence, retire early.
Oh yeah, that's our goal.
Subject.
Yeah, that's the reason why we started this channel, because we want to record our journey.
Not just that, it also inspire people out there who is considering to go having those questions, I guess.
Yes.
This is our journey. So far, I think more than 50%, 60, 70%. Well, no,
actually, higher. So, I mean, you like 50, 60, 70.
So 60%.
I think more than 50. Yeah, 60. I'll say 60.
And up to the stage now, work is it's a choice. It's not a must for us, for the both of us. It's a choice for us to, if you want to do, we can. If we don't want to, then we don't have to. So it is, I guess, the difference point of our lives, I guess. So hope a lot of things that is in this channel give you any motivation in any way. We're based in Sydney, Australia. So yeah,
with 2 kids. They are 5 and 6.
Now they are. In this video, we're going to talk about things to consider when you're buying property, whether it's investment property or principal place of home.
And that's how we started our journey.
So our journey to achieve FIRE is using property as a leverage.
It wasn't, but then we changed it.
Yeah.
But anyway, property is a good vehicle to
it's
achieve.
One of the vehicles that we use.
Yes, to achieve financial freedom, especially in Australia, because there are quite a lot of benefits doing properties in here.
So this is just, I guess, based on our personal experience. The very first thing would be understanding where do you start with. You get confused. Very
confusing. I think it took me at least a year to search. Okay, how reading books, more than 1 year, I think. Reading property investing books, understand all this terminology is like alien languages. I did not understand. So reading, but then procrastinated, did not go through, went for inspection, put an offer, got a report, didn't go through, gave up. Another year, come again.
So the very first one will be really scary, the hardest one. But after that, after the second, third, fourth one will be easy after you're going through the hurdle on the first one. It's very nerve-wracking. To be honest with you, for me, over-analyzing. Yeah, reading a lot of books, a lot of theories, but majority of those theory, it's great. The information is great. In reality, it will be different.
Yes, totally different.
It will be different. So as much knowledge that you have in theory, when you physically do it, throw you on a curveball, let's say. Yeah, a lot of different hurdles that on the theory wasn't covered.
Yeah, correct. No. Well, because whenever you bought a property, you think of the best case scenario. You didn't think of all the accidents, insurance issue. That's a lot of things that
there's a lot. So,
no one tell you about that.
Where do you start? Well, I start with, I guess, reading a lot of information. That's for us.
Yeah.
Over analyzing.
Yeah, I think so.
So I think everyone have to go through those stages. From my understanding, anyway. We read heaps and heaps of books.
Yeah, or go through seminars. But there are so many different strategies as well. Just to go through, feel, and see which one you're comfortable and you understand. If you don't understand, then don't use that strategy. There are many.
Yeah, there's a lot. There's at least more than 10 that I know of, the strategies. Every single one of them have their own pros and cons. They all have good, and then you dive a little bit more and you realize, that's not for me.
Yes, because everyone's situation and especially financial situation is different.
Yeah.
I think that's the main thing. And then if you don't understand, don't go through, like what you said earlier.
So next one would be understanding how much money do you need as a deposit. There's a lot of articles here and there mentioning you can get get finance or on the 5%, 10%, 20%, whatever percentage it is. And then you can borrow money for the rest of them.
Yep, we've done it before.
Yes.
2 of them.
We've done it at 5% deposit. We've done it at 10% deposit. We've done it with 20% deposit.
Yep, because, okay, let's try it all out. Why not? We're the try guy.
So, as a whole, which one would you do?
20.
Minimum.
Yes.
So if you can do it all again, I would definitely do to minimum.
Yeah, that's all your hard work money. Because for the 5%, we did not know that you have to pay a higher interest rate. 1.
That's number 1, yep.
2 is the lender's mortgage insurance that put it on top of your loan.
So if you don't know what it is, lender's mortgage insurance is insurance for your lender that you're paying for it.
You pay for it. You're paying someone else
their insurance.
Yeah, you're paying someone else's insurance from your own pocket.
That's
anyway,
it.
And then you pay interest on it, stretch it out for 30 years.
30 years.
So it maybe sometimes $5,000?
No, it's
Depends
not
on
over
how
30
big.
years. It's over the lifespan of the loan.
Okay, yeah. Well, if you have that loan for 30 years, then maybe 30 years.
Correct.
Yeah.
So the other one would be if we were to change it again in terms of the deposit, let's say, put down instead of 20% more.
If you can.
If you can. Yeah, the more. The reason why I said more is the more deposit that you put down, the less you will have to pay on your mortgage. The less time, or if not, you can shorten the mortgage. Instead of 30 years, you can maybe
pay it off in 20.
20,
right.
Or if not 10, or if not 15.
Yeah.
You don't leverage as much.
Yeah.
You can sleep at night because you don't leverage as much.
Yeah. Or maybe pay in weekly, right? Instead of monthly.
So there's a certain little things that we do anyway. Like for us and for both of us, we agree on changing our repayment to weekly instead of monthly. We decided to fix the loan instead of a variable.
And we decided to pay principal and interest instead of only interest.
There you go. So those are the little key factors, I guess, when it comes to mortgage repayments, like how to get rid of the debt quickly.
Yes, that's our strategy now. We were not like that before. We were paying interest only, minimum payment only, not extra single bit, no. But then now, okay, don't want to pay too much interest anymore, don't want to share our profit with the lender, so we try to pay it off as quickly as we can.
Yeah. So the next one would be buy property with no deposit. Can you do it? You technically can.
Yeah, I heard it. Some of them,
can.
they're saying the bank can lend you 105% or 110%. I heard it before, but I'm just thinking it's quite absurd. Why?
If you can't afford to have a deposit, you cannot afford to buy the property.
Yeah, that's right.
You're just asking for trouble.
Yeah, if you can't just save for that, even 5%, okay, 5 or 10%.
Yeah, so because I look at it, it's just gonna be risky. There's gonna be things that you would not foreseen in the future that will bite you.
Yeah, it comes too easy, right?
Yeah. So, and then the last things to consider would be the cost involved buying a house.
Oh, there's a lot.
Lots and lots of costs.
Yeah, why is that?
Okay, for us, from our experience, we first went to the mortgage broker. A mortgage broker
to assess
our income.
Your income and your expenditure, because if your expenditure is too high, they're not going to lend you money as well. Don't think that if you're a high income earner, then you can get a loan. No, if your expenses are too high, they won't lend it to you too, even you make a lot.
And then they assess your credit if you have any credit as well. Your spending habits, what it look like.
Do you have other loans?
Correct.
Right.
Yeah, and then
how many kids do you have?
So all of that, the mortgage broker actually taking that into consideration, what your lifestyle look like. Now it says that it's free assessment, but when you actually get the loan, no.
Yeah, they got the
commission is based on getting on the loan. So the mortgage broker obviously created a product. Well, it is in their best to give you a loan. Yeah. So they find that whichever lender there is that meet your criteria. Now they do. That's how they get paid, as far as I'm aware.
you don't pay them outright, but it is the bank to pay them.
Well,
right?
If the bank paying them, technically
your money.
It's your money.
Your money.
You're the one that's paying them. So
next is solicitor, because you need someone to draw the contract.
Yep.
So how much was it? Like 1,500.
Depending on the solicitors. You know, in some solicitor you can go as low as $500. It can get up to $2,000-$3,000. Someone actually was about to charge us roughly about 3 or 4 grand.
Oh,
on one of the contracts.
Yep.
So this is somebody that's going to look into your contract, if it's a good deal or a bad deal, understanding the terminology, and it is in their best interest to give you all of the information.
But personally, always use a solicitor. Highly recommended. Well, some people, they don't do it, but I choose to do it because my first property, I went there and then did a report, and the solicitor is the one checking all the other report that I did, and then he said, okay, not recommend you to go through with that contract.
All because of one of the reports?
Yes, the buildings, in fact, like, what's that called? Deficient? No, not deficient. Defects. Sorry, defects.
So the other thing that you got to consider would be actually having the report, the building and pest inspection report.
Yeah, that was the one. The strata report as well.
Strata report. And so these guys actually goes in and out of the building, understanding if there's a moisture damage or if there's structural
earth
damage.
Movement.
Yeah. A lot of things, like the hidden beyond the eyes.
Yeah, I let the professional to deal with it.
Yeah, and that was the reason why you didn't go ahead with your first property purchase.
Because with the I think it's the building report, and then the solicitor read it because I did not understand who's going to read those reports.
And the report is very thick. Some of them up to 30-40 pages. I'm reading. I've read a few of those and like, oh my god, this makes me look scary. Do I really want to buy this property? Because it's got all of this. What does that mean?
Yeah.
So and then the next one would be if you're using a buyer's agent, there's always going to be an agent fees as well. So, or if not, if you're using a real estate, it's a real estate agent fee. So, we did it with a buyer's agent, let's say.
Yes, we did.
So with a buyer's agent, is they're looking in the best interest of you. That's the concept. Based on your borrowing capacity.
Yeah.
They search properly based on your price point, let's say.
How much you can borrow.
How much you can borrow, and what's the outcome if you're using as an investment property. They give you a scenario. What's their outcome, let's say. If you buy it, using it for income purposes. The other one would be the real estate agent.
Yep.
Yeah, the real estate agent technically is supposed to be getting paid by the seller.
Yeah.
But effectively, when you buy it,
built in your price.
It's built in the price. So you're the one that paying for it. So using the real estate agent as well as buyer's agent, you're technically paying both.
Double. Yeah. It is a expensive transaction.
Coming from personal experience.
Yes. Next one is stamp duty. Each state is different, but each
dollar figure of the property is different.
Yeah. What
type of it is, like if it's a unit, townhouse, or a house, it's all different.
Yeah, and it's based on the purchase price to pay the stamp duty. You can't really hide if you're buying it for investment.
So hopefully this gives you guys a little bit of understanding of things to consider when you're buying a house. Don't forget to subscribe, comment, guys, and
see you next time.
Bye.